if you're a W-2 earner, you're on the wrong team because you're going to pay the most taxes.
Taxes are made to
benefit entrepreneurs and investors because we're making jobs, we're stimulating the economy, and we're doing what the government wants us to do. So they give us massive tax breaks.
All right, listen, if you are a coach consultant, I know something about you. The average is you make less than $5,000 a month, okay? And you never, ever get to $20,000 a month. I think the exact number is $4,524 a month. That's your average. But most coaches, consultants never get to the $20,000. But the number one reason is because you're having a hard time attracting clients. You need client attraction. Well, the good news is my friend, my coach, my mentor helped me make $35,000 in less than a week. And it was all the information from his paid ad playbook, Mr. Marquell Russell. He has the receipts to vouch, including myself, okay? Listen, he helps you attract clients. You need the paid ad playbook. If you want to get 50 to 100 new leads every single day, you're going to need the paid ad playbook. To this date, his clients have generated over $500 million in sales, $500 million. And he's giving you this paid ad playbook for free, absolutely free, 100% off, just for our social proof listeners. Listen, so if you are a coach, a consultant, a service provider, a course creator, and you want to get people to pay you $3,000 to $10,000 for your product or service, for your expertise, you need to go to socialproofgift.com. It's a gift for you. Socialproofgift.com or text proof to 904-447-5274. All right, let's get to the episode. Welcome to another edition of the Social Proof Podcast, where we find dope people that really, really dope stuff. Today is no different. Came in here with some drip. I don't know if you can you get close on that? The Melanin Money?
Melanin Millionaire. Melanin Millionaire.
Melanin Millionaire.
MelaninMoney.com.
Because y'all know,
grab your set.
Before this, I was like, yo, I need equity in that company. So listen, if y'all see me start wearing all Melanin Millionaire gear, just know it worked out.
For sure.
For both of us, favorably. Right?
For sure. I mean, I love collaboration.
Well, there we go. So, welcome to the show.
Happy to be here.
Happy to have you. I like the energy already.
Yeah.
Okay? Because what you were explaining is you help entrepreneurs not have to give the man or give Joe Biden all your money.
Yeah, help entrepreneurs live tax-free. We're living in a society right now.
When you say tax-free, what do you mean?
Like not pay taxes.
At all?
It depends on how good the strategy is, right? And that's situation by situation. I'm going to give you some game that if you implement.
So you're a tax strategist?
Yes, I'm a CPA.
Oh,
yeah.
See? Tony, we're here, okay?
CPA,
so you gotta
I work hard for that license, you know what I'm saying?
So, but not all CPAs focus on taxes, right?
Not all CPA focus on taxes.
But your thing is taxes.
Oh, yeah. It's everybody's number one expense. Do you know the average person pays 40% of their lifetime income in taxes? You're basically working 40% of your life for free.
That sucks.
Who has time for that?
I don't got time for that. All right, so introduce yourself, Larry, because I got a million questions because there's like some real stuff for me right now.
Yeah. So my name is Carter Cofield. I'm a CPA, and my goal is to help entrepreneurs live tax-free. So I have books, courses, masterminds, all that jazz, because right now, especially in the Black community, entrepreneurship is hot. A lot of people making a lot of money, but the problem is they don't know how to manage it or how to lower their tax bill. They're going to be surprised come April with all this money they made. And my goal is to not let that happen.
Okay. First off, is that your real name?
Carter, yeah.
Not Carter Cofield?
Yeah.
That's a cool name. Sounds like stage name-ish.
No, it's my real name,
It's
bro.
your real joint? That's all. All right, so I just want to put that out there. All right, so this lady, I think she's for sure the wrong person to be talking to after she told me this news. And, she's like going through my numbers and stuff like that. And she said, yeah, you're probably gonna have to pay about 35% in taxes. I said, of that number? When? I'm not doing that. And then I started thinking to myself, I'm like, yo, we all default to, well, Donald Trump don't pay no taxes.
Right,
How you do that? And so that's where my mind went.
For sure.
So first off, explain taxes and why it's set up like that and why some people don't have to pay it.
Okay, got it. So
I asked you like 4 questions.
No, I mean, I'm gonna break it all the way down.
Explain taxes first.
Got you. So here's the thing. Most people don't know the tax code is nothing to be scared of. All the tax code is an incentive system for you to do what the government wants you to do. I like to call it an incentivized game. And like any game, you have to do 2 things. Number one, you need to be on the right team, right? So taxes are made to benefit entrepreneurs and investors. So if you're a W-2 earner, you're on the wrong team because you're going to pay the most taxes.
Taxes are made for...
to benefit entrepreneurs and investors because we're making jobs, we're stimulating the economy, and we're doing what the government wants us to do. So they give us massive tax breaks, which we're going to talk about later. But the second piece about it is you have to know the rules. And one of my favorite rules is for people to understand what I call like the golden tax formula. Very simple. When you're a W-2 earner, right, you get paid, right? You had a job before, okay? They took taxes out before you even said anything.
Correct.
They gave you what's left,
Right.
As a business owner, you get paid, you spend money, reinvest into your business, you pay taxes on what's left, right? So it switches the equation. So now you control the taxes that you pay by how much money you reinvest and spend into your business. So you're actually in control of what you can do. So I like to educate people on first taking control of your tax situation and then use the strategies I'm going to talk about to minimize your taxes.
Gotcha. Very first thing we need to do as entrepreneurs that like make money, because this is a good last couple years.
Yeah, no, I mean, the show's doing great.
Yeah.
It looks like
it's couple hours. But so, okay, not my situation, but just in general, a lot of people have made a lot of money in this, I guess, I don't know, it's not a down economy, it's in this pandemic time, right? What are you most afraid of for our people?
I'm most afraid of our people spending all of the money that they make and then not saving up for a massive tax bill that could put them in jail, right? So for me, it's just like the number one mistake entrepreneurs make is not understanding the tax deductions that we're allowed to have. Do you know it's over 300 tax deductions that each of us can have? There's no excuse for you to be overpaying taxes. And here's what I say. We all need to pay what we legally owe, but let's not leave a tip, right? A lot of us are leaving, I'm serious, right? Like a lot of us are leaving $10,000, $20,000, $30,000, $40,000 tips to the IRS, but we don't even tip our wages, right? So my goal is to teach you all some of my favorite strategies on how to lower that amount. So to answer your question, like it's just about knowledge, like how's it go? Conversation changes compensation. So I hope this conversation changes how much taxes you're going to owe in a couple months.
Absolutely. Okay. So now I'm just like racking my brain on, okay, how much can I not pay? Because I don't think I quite understand a write-off.
Okay.
Right?
Can I explain it?
Please.
Okay, for sure. So guys, a write-off is anything that is ordinary or necessary to operate your business, right? So any money that you spend that is attributed to your business, and the dope part about that is a lot of your personal expenses become business expenses once you start a business. So for your cell phone, right? You use your cell phone in your business.
Yes.
That's a tax write-off. That's a business deduction. You take that amount of your cell phone, subtract it by your income, right?
What about my drip?
I'm going to teach you how to write off clothes. I'm going to teach you how to write off clothes.
Okay.
I got 4 strategies I want to teach your audience. That's going to change your life.
Okay.
But before that, understanding a write-off is very simple. It's just any expense that's ordinary and necessary for you to operate your business. And when you think about it, you're like, I need my car to get to business meetings. I need my internet. I need to use my computer. All these Apple Watches, you can check your email on the Apple Watch. You can write that off too. So just understanding before I spend any money, I ask myself the question, is there a way I can write this off of my taxes? And 90% of the time it's away. Really? See, somebody was telling me it's not, you can't do all. For one, a blanket statement, no, you can't write off clothes. They're lazy. You said, what's the question?
I said their name.
Okay. most accountants and CPAs are lazy. All they want to do is just do your taxes to get you out the door, right? I'm a tax planner, right? And if you take care of business during tax planning season, you don't have to worry about things during tax paying season. Right? So the goal is to get somebody that's going to help you understand and strategize on instead of saying no, but how can we make this happen? Okay. So do you want me to teach you how to write off clothes? Come on. Since we're on it? Let's do it. So this is Melon the Millionaire drip, right? You like it? It's drippy. It's drippy. So basically the IRS used to say you cannot write off clothes because unless it's a costume, you can't write it off. But if you get your logo visibly stitched on your clothing, you're now a walking advertisement for your business. That could bring more business back home. So if you get your logo visibly stitched, what the IRS says, you can write off the cost of the clothes, the stitching cost, and every time you take it to the cleaners. Right? If I get a Louis Vuitton hoodie. I knew that was coming. Every time. Let's just say. Every time. And I take it to my embroidery and I get the logo, my social proof logo right here. So here's what I say. Ordinary and necessary. I don't think there's nothing ordinary about Louis Vuitton. Right? So I don't recommend people try to get their name put on luxury items. But like, like a Nike jumpsuit, Nike tracksuit, a nice blazer, you know what I'm saying? You can get your logo put on that, but I wouldn't go luxury. You might get away with it, but like, I don't want you to try that one.
Okay. Here's the thing.
Okay, let's talk about it.
I got this watch, right?
Uh-huh.
And I want to write it off, right? What if I did a podcast episode on watches and I got the watch so that I can be in the conversation of the podcast episode?
If Rolex was a sponsor, then yeah, because now that is actually bringing revenue into your business. You can track it.
If Rolex is a sponsor.
Mm-hmm. Because you're now wearing that in promotion of a business activity that can bring in more business to your podcast. So it's all about creativity.
Right.
It's about thinking of how
being legal.
It being legal, right? It's about how can I make this a tax deductible expense based on is it bringing revenue to my business or not?
Gotcha. Give me the most monumental, or maybe just a memorable situation that you had, maybe with a client. You got to say their name, right? Mm-hmm. But a situation they were in that was really messed up.
Uh-huh.
And how did you get them out?
Got you. So, do you know what an S Corp is?
Yeah.
Okay.
Explain that. Okay. First off.
Got you. So, guys, this is very important. This is probably gonna save you $100,000 off the rip. So, if you have an LLC, right, a basic LLC, all money that comes through your LLC, you have to pay 3 types of taxes on. You have to pay federal, which is about 25% on average. State, 5% on average. But self-employment, the FICA tax, like the Social Security, that's 15.3%. So you add all that up, that's 45.3%. So if you make $100,000, you gotta give $45,300 away to the IRS, right? If you have an LLC. If you have an S corporation, you can't do nothing about federal and state, but you can save on FICA because here's how it works. If you have the same $100K, you only pay FICA on the salary you pay yourself when you have an S corporation. So if
say it one more time,
you only pay FICA taxes, right, on the salary that you pay yourself from your S corp, right? So if you had that same $100,000 and you paid yourself a salary of $30,000, you only have to pay that 15% on that $30,000 instead of the whole $100,000. So now $70,000 is avoiding FICA taxes.
See, here's the thing. I'm getting different things from different CPAs. Some CPAs say, like I was talking to my man Jay, and he said he does all LLCs.
Okay.
And there's some way he does it and it saves taxes or something like that. Then somebody else says you need to, you can have all these LLCs, but you file elect S Corp or something like that.
Yeah, so here's a basic understanding. If you have an LLC and your net income is $50,000 or less, an LLC is perfect for you. $50K or less net profit. That makes sense? Anything over that, you need an S corporation because it's going to help you save tremendously on self-employment taxes.
Am I filing it as an S Corp? But I have like a bunch of LLCs, right? But are you saying I have these bunch of LLCs and I'm filing all of these LLCs as an S Corp? Or all of these LLCs should be all S Corps? Because I got different businesses.
Yeah, it's the easy strategy to do. This is game right here. If you have one S Corp, right? And it owns all your LLCs, all of your money comes into that one business, and then you have to do payroll one time. Right? You do payroll one time for 30%. That's a good number of all the money your business made. The other 70% avoids FICA taxes. It's confusing?
Now I'm processing.
Okay.
But you still got to do returns for each LLC, though. Yes. Yeah,
but it's a lot easier on paying yourself. So I can give you a better example because I don't want to confuse you.
Please.
Okay, so you heard about the whole G-Wagon car write-off thing, right?
It's over 4,000 pounds.
6,000 pounds.
6,000.
So here's the thing. I just bought a new Mercedes-Benz AMG, right? The car was $120,000. Because the car is over 6,000 pounds, the IRS will let you write off 100% of the value of the vehicle, even if you don't pay for the whole thing in cash. So you can go to the dealership, finance this car with $10,000, right? You get the car, you get $120,000 write-off the year that you get the car. So now it's lowering your taxable income by $120K.
Hold on. Let's say I get a $120,000 vehicle this year.
Yes, year.
But I didn't pay a whole 120-something thousand. I paid $10,000. But I made $1 million, let's say.
Yep.
Or $500,000. Let's use $500,000. Let's use $200,000.
Okay.
$200,000. We made $200,000. I can write off $120,000 of this $200,000 and only have to pay the $80,000 and I'll pay tax on the $80,000.
Exactly.
Are you sure?
I'm positive. This is what I get paid to do. And then that's just one strategy. But that's
I'm about to buy a truck.
I mean, why not? So I just buy. So I tell people. So here's what I tell people this all the time. Do you know there's 2 tax seasons? Most people think it's one, right? There's tax paying season, then there's tax saving season, right? Tax paying season is January through April. After the past year closes out, there's nothing much we can do. We can't go back in time. But this last quarter of the year, you need to be doing tax planning, so buying cars, doing all these things so you can lower your income by December 31st. I can get that thing down to 0. That was just one strategy. And so now...
What about buy a building?
Yeah, that works as well. So you want to explain that?
Yes.
Okay.
Yes, explain it. Yes.
So real estate is so dope because it's the most tax advantaged investment that you can ever have. Because it's something that's called earn in pocket, lose on paper. So the reason Donald Trump doesn't pay any taxes is because he earns all this money in real life, but he gets to write off everything on his taxes. So let me break down the biggest tax for real estate is depreciation. So if you get a real estate building, right? Say it's $500,000. You get a depreciation deduction of whatever that $500,000 divided by 27.5 is. That's $18K. $18K.
Why is that?
Because the IRS says...
Ain't no way you that good, bro. Hold on. Ain't no way you that good, bro. Hold on.
The IRS says that since your property's going to lose money in value every year, we're going to give you a deduction for your property losing value.
You said 500,000 times what?
Divided by 27.5.
Divided by 27.5. By 27. Hold on. I don't know if my calculator can do it, but that's right?
Yeah. Because it's my property, so I know it's right. I own a $500,000 property. Mm-hmm. So this property makes me $1,500 a month, which is $18,000. Mm-hmm. So I'm earning $18K, but my depreciation is $18K, so it's wiping out all my income. So I don't have to pay any taxes on that real estate income that I have. Isn't taxes fun? Like, taxes
still not
be boring
because I still got to pay stuff. But, well, until we get this together.
Right.
So that's why. Okay. So I need to get my stuff together. Are we close? We almost ready to get it? Because I need to know. Close. Okay. All right. Because this is scary stuff, bro. Like, there are people that go to jail for this.
No, for sure.
And not even out of trying to cheat anybody, just negligence.
Just negligence, right? So that's why I love teaching it so much, because I want to give people the comfortability over something that scares them so much, right? And I want them to be so comfortable they can start having fun with it, right? So like you said, I brought up buying a car, your ass lit up, right? What if I told you I can help you turn every vacation you take into a business vacation?
Proceed, Carter.
Proceed? Okay. So... This is my favorite concepts. It's called wrapping a weekend, okay? So let's say you and your boys going to Miami Saturday and Sunday to get lit on the weekend. Somebody's birthday. That's a 100% personal trip, right? Mm-hmm. I would advise you, instead of going on Saturday and Sunday, I want you to fly in on Friday and I want you to leave on Monday. And what I want you to do while you're in Miami, I want you to find some business activity while you're in Miami. The business activity can be anything. Taking a client to lunch, taking a prospect to lunch, going to a conference. I go to eventbrite.com and just find a networking event in my industry, right? So I'll go find an accounting networking event. So if you find business activity that Friday and that Monday, the IRS doesn't care what you do over the weekend because you have to be there for those 2 business days. Therefore, they'll let you write off the flight, the lodging, and the meals that you have over that weekend.
Wow.
Because you have to be in Miami for business activity, right?
So how do you track it?
Yeah, so one thing I would do, let's say you got friends, you probably got friends in Miami, right? Yeah. Business partners. Mm-hmm. Take them to lunch. Keep the receipt. On the back of the receipt, write who you went to lunch with and what business activity was talked about. Do that same thing on Monday for the next person you take to lunch. And then you have legit documentation that I had to be in Miami to meet with this partner to talk about this business strategy on Friday and on Monday. And therefore, the IRS says, hey, we don't care what you did over the weekend because you have to stay, go have fun. We'll let you write off the flight there, the lodging, and the business meals.
I think that's my challenge in terms of keeping the receipts.
Do you use like a QuickBooks software or anything?
Yeah,
nope.
QuickBooks.
Yeah, so you just take a picture and then automatically upload it to QuickBooks in the moment.
Oh.
Yeah.
Huh?
Yeah.
Yeah, I have that.
Take a picture of the receipt, upload that thing.
You use QuickBooks?
Yeah.
Hold on, show me where it's at.
I highly recommend using QuickBooks.
Show me where it's at.
I got you. QuickBooks? Yeah. I think you do it on main. I think you just upload it on the main one. I'm pretty sure.
Hold on, I need to.
It's in the middle of the joint.
Yeah, no, this is important.
It is.
So let's see. All right, so snap receipt.
It's right there. It's on the home page, yo.
That's crazy.
It's on the home page, King. That's wild.
It says snap receipt, and you snap receipt, take a picture. And I don't have nothing to snap right now, but it asked me to describe it, I suppose.
Yeah, and then you can just put the description. That Miami lunch date with XYZ.
I know what you're thinking. How the heck do you make money from a podcast? Is David just doing this podcast because he likes it, or there's a heavily monetized strategy attached to it? Well, it's both. I really love talking and interviewing people and getting free game from really successful people. But also, this is a 7-figure podcast. I'm telling you right now, there's so much money in podcasting, and we're early in the space. I really feel like it's 2009, and I'm telling you to buy Bitcoin. I'm right now telling you to start podcasting because in 5-10 years, it's skyrocketing. Those are the names that are going to be the ones who have the voices in our world, the ones that start a podcast right now, okay? So I put together everything I know about podcasting in an easily digestible program, okay? So go to podcastersblueprint.com, and you know I got to give y'all some love, okay? Enter code SOCIALPROOF. I'm taking 20% off so you can get your voice heard, all right? So this podcast that you're loving and enjoying, there's other people that's going to love and enjoy yours too, okay? Podcastersblueprint.com. Let's get back to the episode.
Now, every time you travel, you can run the same play and use your business card and never have to pay for a personal trip again.
Okay, what about, what if I'm so far behind? Though?
It's okay.
I don't have receipts from this stuff I was doing this year.
If I told you how many entrepreneurs didn't have their things together, you'll feel good.
Okay, great. I feel better. What do we do?
So I think the first thing, man, like, hiring a bookkeeper is probably the best thing any entrepreneur can do. Their job is to help you organize your unorganized life.
Yeah.
Right? I'm a CPA and I have a bookkeeper, right? Because I understand the importance of having my transactions in a category so I can understand how my business is doing. How can you take your business to the next level if you don't even know where your current business is standing right now? Right?
Can you write that down for me, Joe? Because I need to remember that. Like, seriously, I need to just text it to me. Text me that real quick. So one of the most important things is a bookkeeper. And I have a bookkeeper.
Yeah,
now.
but you want a really good one that's like, because again, your numbers tell a story. And if you don't know where your numbers stand in each category, how can you make business decisions on how you take your business to the next level?
Or figure out how much I'm spending in a particular area.
Exactly.
Next year.
Exactly. So a bookkeeper is a huge hire. And so many people are like, I don't want to pay that. It's probably the best money you're going to spend as an entrepreneur. A really good bookkeeper.
How much do you pay a bookkeeper?
$700 a month.
Really?
I have a lot of transactions.
I thought that was cheap.
Huh? Oh, I mean...
They're a good one.
They're a good one. Yeah, $700 a month. That's what, $8,400 a year?
Okay.
To organize my finances, I think that's worth it.
So say you come into somebody's organization. So I got my books, all that kind of stuff. I got... I have a bookkeeper, they're categorized and everything. But let's say, for instance, you find somebody who doesn't have any of that. Mm-hmm. Where do they go? Where do they start? You know what I mean? Because it's all a mess right now.
Right.
So where do they start?
So what a good bookkeeper can do is they can go back and retroactively fix all your old mistakes. Mm-hmm. Right? So it takes some time. They're going to have to import everything, but they can retroactively fix the past 11 months that you didn't do anything, get you to a good square one so that you can proceed with step 2 and 3.
My last 3 years, bro.
Ooh-wee, you've been playing, huh?
Because, you know how to make money, but keeping it and like organizing it and tracking it, that's a different monster.
For sure. And I think as entrepreneurs, our job is to be great at what we do, right? We got to get really good at outsourcing the things that we're not good at. Right. And a bookkeeper, a good accountant, these are things that I think are investments. Like the clients that I work with one-on-one, I work for free.
What you mean?
Because I will always save you more money than I cost you. A good CPA should work for you for free. If they charge you 30 grand, they should be able to save you 50 grand. Charge you 50, they should be able to save you 100. So when I say I work with my clients for free.
You charge 30?
No, I charge more than that.
You charge more than 30?
Well, for one-on-one, yeah. It's a lot of work. But like, again, if I charge you 50, but I save you 200,000, who won?
I won.
Exactly.
Is it all up front or monthly or what?
We can talk about that.
So you're not a CFO for companies, right? You're not acting CFO or anything.
I have a team that kind of helps with that, right? But the point is, like, if they save you more money than they cost you, it's like an investment. So,
That's
like,
a fact.
right, and like me educating you on the tax strategies. I actually have 2 more I want to give you. Your birthday's coming up,
Yes.
right? Can I teach you how to write off your birthday trip with your
Come
friends?
on, let's
Okay.
go.
So, my birthday was in July, and I went to Colombia, Medellin, Colombia, with my friends. Booked like a $10,000 Airbnb. It was lit.
Hold on, how much more than 30 you charge? What you charge right now?
Why don't we really do one-on-one no more? It's all like group because it's just a lot. But
You do any one-on-one? I'm
getting away from it. Come on, man. Let's talk. Look at him. Oh, hey, he different, man. But nah, I swear, my brother is different. He persuasive.
Okay, go ahead.
If your friends are your business partners in some way, which I assume that you are, because you got your hands in every business venture you can get in. So if your friends are your business partners, right, and you have this birthday trip with them, every business gets 1 annual meeting per year. So if you wanted to go to, I don't know, Turks and Caicos and have social proof annual meeting, right, and you brought your friends who you own businesses with, that is now your company's annual meeting, which is a business expense. You all have meetings once a day, you track it, you take pictures, and now you're able to turn this birthday vacation into a business write-off as an annual meeting. So this is the play I run once a year for my birthday. But my friends are my business partners, and if you're gonna be my friend at this age, we better be doing some business together.
That's a fact.
That's a fact.
I like that.
Yeah.
So you can write off the whole trip.
You can write off the whole trip because as long as you meet at least one time that day and document that meeting, every day is a part of your annual meeting.
And how do you document it?
I use Toggle for time tracking, and I use just like a Google Drive to keep all of the documents.
Too many apps, man.
We could put in your QuickBooks receipts if you want to.
So you can use QuickBooks?
Yeah, QuickBooks for everything. But I think the annual meeting play is huge. It's a way for you to turn one big event a year into a tax write-off.
Got you.
Yeah.
All right. So when do you got to start doing all this tax planning? Just before? So we're later in the year now. We have to we just start tax planning now so that we can file before April.
Yeah. So I recommend you start tax planning in July, right? So you get the last 6 months of the year to really build this plan, which is, and again, this is your CPA's job. This is your CPA's job. When you come to your CPA, you're supposed to say, David, let me tell you something. Let me look at your numbers. Look at your numbers. All right, here are 5 strategies I think we should implement. And he should give you the 5 and see if you're okay with them, and then he should help you implement them. This should not be work for you. But I love educating you so you can know what's happening, right? I don't want anybody just telling you what you should or should not do. I believe everybody should be educated.
That's true.
Right? So, you run this car play, you running this traveling play. These are all things that you kind of have to do going into it, you know? So finding that business colleague for lunch, picking that place for your destination, buying the truck before December 31st, so you can write the whole thing off. Like, we can get that income down to 0. So that's what I mean by tax-free living. If you plan appropriately, you can get that tax number down to 0.
I gotta get a truck. You know, I ordered, I wanted this Tesla, but I don't know if it's over 6,000 pounds.
You can Google it. But Tesla Model X?
Yeah.
Yeah, it's over 6,000 pounds.
Is it?
Yeah.
But it don't come till January.
Did you pay for it already?
I put $100 down to customize it. I don't think they let you.
See, here's the thing about taxes. It's about when the money was spent. So if you pay for it before the end of the year, you're good.
What about my $100?
$100, yeah, you can write that off, but that ain't gonna do much for you.
I'm saying, you remember you was like, yo, you can put down $10,000 or whatever?
Right.
But so I went into the Tesla place and they said, well, you can order it. You just got to put down a $100 deposit.
Got you.
So I put down the 100.
The Honda.
And I started making my little configurations. And they said, well, you'll have your car in January. This was 5 months ago.
Okay. Well, since that is not going to work, can I give you a play on how to write off your rent?
Hold on. How can we... Should I just pay for it now?
What, the Tesla?
Yeah.
If you can, I would put
if they let me.
If they let you.
But if not, I need to just buy something else.
Just buy something else, which is why I was going to give you the how to write off your, how to get the IRS to pay your rent play.
My rent?
Your rent.
Okay.
Or mortgage.
Talk about it.
Okay. So here's the thing. So if you have, let's say you rent an apartment, it's $4,000 a month, right? Yeah. Just for simplicity's sake. And you have a home office. I mean, a dedicated spot in your home where you work every day, right? So it doesn't have to be a room. It can be dedicated space. Let's say that dedicated space is about 25% of your total living space. So it's 250 square feet and your apartment is 1,000. Yeah. Your home office is now 25% of your apartment.
Yes.
You now can write off all your rent expenses up to 25%. So if your rent is $4,000, you're able to write off $1,000 a month because that $1,000 is your home office's rent.
God, how do they know that you have a home office area? How do they know?
So here's the thing,
Are they just trusting the calculation? Are they going to come to your crib one day?
If you're an LLC, if you're an LLC making less than $1 million, I think you have like a 3% audit risk. If you're an S Corp though, your audit risk declines by 1,500%. Because they know if you have an S Corp, you know what you're doing. They don't have time to audit everybody. So you want to keep track of your stuff, but S Corps, you have a 1,500% less likely chance of being audited. But they come audit you, they come look at your home office. You have a legit home office. And they're like, all right, we out here.
Gotcha. So you're saying, I don't turn all these LLCs into S Corps.
Mm-mm.
You're saying they all need to be housed in one S Corp.
Mm-hmm.
And then every business has to have its own return under this S Corp, or you got to file each one of those returns separately?
So when your LLC when your S Corp owns all your LLCs, you only have one tax return, which is the S Corp tax return. That's it. That's why the strategy is so dope.
And the S Corp will encompass
exactly.
the income
all
from
the
these
entities.
different things.
Exactly. So now you have all these companies coming into one company. You have one tax return. It's a beautiful thing.
This is good. This is good. So let's say somebody that is a new business owner.
Gotcha.
Fresh entrepreneur. Anybody you got one business right now. You trying to figure that thing out. Anybody here? You got one LLC, right? Mm-hmm. What advice would you have for young Trey on he's making money, mm-hmm. Some of it's Cash App, I'm sure. Probably. So you take Cash App for designs? I know. You take Cash App for designs, cash, just send me some bread, Zelle me.
Right.
What does he need to do?
So I think the first thing you need to do is have a business bank account, right? And have all your money funnel into.
You have a business bank account? No, not yet. You're going to jail. You know that, right? You're going to jail.
Everybody should have a business bank account because that allows all your expenses to come into one account. And I usually recommend people have 3 because you need 1 for your income, 1 to set aside money for taxes, and then 1 for your expenses.
Oh.
This is how you stay organized, or it's beauty and organization. So
hold on, whoa, don't speed past that.
Okay.
So we need to have 3 business bank accounts for the one company.
Mm-hmm.
1 where the money comes in. Yep. So if I have a Shopify store or whatever, all the money goes into this account.
Shopify, PayPal, Cash App, all that money comes into that one account.
And then how do you know what to transfer to these other 2 accounts?
Good. So my rule of thumb is you should be transferring 30% into your tax account. You're just saving for taxes, right? If you have a good CPA, you're gonna need to use all the money, but I'd rather you at least have it set aside, right? And then I'm sorry,
I'd rather you have it set aside. Just hit me, bro. That joint hit different.
And then expenses, you can transfer money based on whatever your expenses are. But here's the dope part about it. When you go apply for loans in your business name or a car in your business name, they ask for 6 months of business bank statements. So you're going to give them the 6 months of bank statements from your income account because your income account is going to show all this money coming in and then only 2 transfers coming out. So you're going to look like a super responsible business owner because you don't have all these miscellaneous transactions coming out your business account at the same time. So I think it's going to increase your likelihood of getting approved by like 50% because you have all this money coming in, 2 transactions coming out.
I like that.
Yeah.
I like that. That makes sense. So 30% of your income go to taxes, and I guess you calculate how much your expenses are.
Right, exactly. Transfer it over. And then that helps you with organization and tax savings.
That is really smart. Where'd you come up with that?
Profit First, book by Mike Michalowicz.
Book by Mike?
Mike Michalowicz, called Profit First.
It's really good?
It's a really good book. I think every entrepreneur should read. That should be like the first 3 books. Like 4-Hour Work Week, Profit First, and maybe like Rich Dad, Poor Dad to get you out the rat race mindset.
Can you text me that? Because that would be the next book club. Profit First. Profit First. I like that.
Before I forget.
You better get a commercial on here. I like what's going on. You buy things to show off. I buy things to write off. We are not the same. Ooh.
So the point of this,
you got a large?
That's a medium. I can get you a large.
Okay.
I can get you a large.
I'll wear this one in the meantime.
Okay, cool. Because here's the thing I want every entrepreneur to know, right? Like, it's okay to flex, but let's flex smartly, right? Like, a lot of people are buying things just to show off to people. I'm buying things to write off. Like, when I flex on my international trips, best believe the IRS is paying for it. When I flex on my new car, you best believe the IRS is paying for it. New apartment, IRS is paying for it. So it's okay to flex, but let's just flex a little bit smarter as entrepreneurs, because we have the opportunity to turn what we consider show-offs to be tax write-offs.
I still want to know this scenario. Like, give me one of your favorite stories or client testimonials. Like, you don't have to tell me their name, but
I got you.
Give me some situations.
So one of my clients, we met in October. So like we were in the midst of tax planning season. She's probably bringing in like
2021.
This was like last year.
Okay.
Yeah. So she probably like $500,000 in net income. So I was like, all right. But she had 4 kids.
How much gross?
I think it was like 1.1 or something.
And then the
net was about 400, right? 400, 500. She had 4 kids. They were all between the ages of like 7 and 16. She didn't know that she can pay her kids out of her business and that she would get a write-off for it, and her kids would receive the money tax-free. So her kids were doing actual work in her business. They were like, shredding papers and cleaning up the office and helping her with social media. So we're able to pay each of our kids up to $12,500 each. We get the write-off for that. So whatever 12,500 times 4 is, that's how much she got the write-off on her taxes. But the dope part about it was each of her kids received that money tax-free because their standard deduction wiped out their income.
Gotcha.
So now she's passing money to her children tax-free, and she was able to open up a Roth IRA for her kids and put $6,000 of that money up into investments. So she's saving money on taxes, giving her kids tax-free money, and that money is growing for them tax-free. She was ecstatic.
It's growing for them tax-free. What do you mean?
A Roth IRA, do you know what that is?
Well, I know what it is, but
okay.
Joe...
Okay, gotcha. So a Roth IRA is simple, y'all. It's you could put up to $6,000 in this investment account a year. That money will never be taxed in the future. So if that $6,000 grows into $600,000, you don't have to pay any taxes on the growth of that money. So my first $6,000 every year of my life, it has the name Roth IRA on it. I'm not going to a club. I'm not buying no shoes. I'm not doing nothing until I fully fund my Roth IRA with $6,000.
Roth IRA with $6,000.
That's the max you can put in there.
That's the max. Okay, got you. Oh, so you're saying with your kids, you set up all the kids with a Roth IRA, give them that. Well, I guess you can only do 6,000.
Yeah,
but I mean, you still put the 12,000.
Yeah, still 12,000, but half of that is going to their future. And then the other half. Here's the thing: you're spending money on your kids anyway. Why not spend after-tax dollars on your kids instead of pre-tax dollars? You know what I'm saying? So I just tell people all the time, like, understanding the...
Oh, that would be dope.
That is dope.
Because I can pay my child $12,500, right, throughout the year. Let's just say that's $1,000 a month. When she wants some shoes, she buys them with her $1,000 a month.
You're already giving them the money.
And then it's like you do whatever you want to do with your bread.
Exactly. And you're getting the write-off in your business because you get to write off the $12,500 in your business.
Yeah, because I was about to say, I cannot write this little human off. She eats all day, bro.
I mean, kids are
all
expensive.
day. She be at the crib just eating all day. Like, I'm like, how do you eat? How do you go to the refrigerator every 90 minutes? It's crazy. All right, here's the question I had too. So I put some money into this investment. It's a it's a hedge fund.
Okay.
You know what a hedge fund is?
I used to work at a hedge fund.
Okay. I don't even know why I disrespect you with that question. Because I just found out.
I mean, it's not good.
It's a hedge fund, so they take the money and they trade money for the returns. And I can see what my returns are. So let's just say I put $100,000 into this thing and the account grows to $300,000.
Yep.
I want to take my $100,000 back. But somebody was telling me that I'll get taxed on the $100,000 that I bring back.
Right.
Is that right?
Because you're taking some of your gains out as well.
But I put $100,000
You can't just take your bases out without taking some gains out. It doesn't work like that, unfortunately. So at first it depends on 2 things, right? Did you have it in there for longer than 12 months or less than 12 months?
Less than 12 months.
Now you're paying short-term capital gains, which is ordinary income tax rates. At least let it stay.
35%?
Yeah.
But it's an investment. You don't want to just let that money stay because it could not work out.
I look at investments like this. Unless I have a better place to put the money, I'm not moving it. Right?
Well, what happens if this particular hedge fund just doesn't work out and you lose all your money?
I guess that's the risk of investing. But I think it's worth waiting a couple more months so you can get the short-term capital gains rate, which is 10 or 15%. Now you're saving 20% just by waiting a couple more months.
Say that one more time.
Long-term capital gains range from 0 to 20%.
Long-term capital gains 0 to 20%. And what dictates that?
Anytime you hold an investment longer than 12 months.
If you hold an investment longer than 12 months, you have to pay 0 to 20% of
taxes on the money.
Of taxes on it. But you said short-term is 15%.
No, short-term is ordinary income tax rates, which is what? 35.
35%?
Yeah. It depends on your income, though. It's 0 to 35, but I'm talking to you because you're probably in a higher tax bracket.
I'm not.
Oh, okay.
Don't get it twisted out here, man. It's not. Okay, 0 to 30. So give me the tax bracket between 0 and 35. What is that?
Like break it down by income.
You might not know that.
Yeah, I don't know about heart, but like single and married. But like if you're making over $300,000 as a married couple, you're probably in the highest tax bracket. So again, you want to get those long-term capital gains rates.
All right, look, I know you're enjoying the episode, but I got to tell you, finally, you asked for it, and we created a Patreon, okay? We created an inner circle. We have amazing stories, amazing information, how-tos from the episodes. The only thing we're missing is a community. So it's about that time. We put together a Patreon, we put together a community because we have to have conversation around the information. So even this podcast we're listening to right now, there needs to be conversation. I want to hear what you got. Like, let's throw some stuff back and forth. And because we're like-minded, we're all going in the same direction. When we connect in a community, we can connect on other stuff outside the community because we're building real relationships, okay? So check out the Patreon. We got 3 tiers. I don't care what tier you join. The support is appreciated. Okay, thank you so much. Now back to the episode.
Have you heard of a solo 401k?
A solo 401k. I have, but Joe.
Okay, good job. So it's so many powerful strategies, man, for that business owners can use. And here's the thing. At the end of the year, when you're looking at your net income number, you got 2 choices. You can either give the money away to the IRS, or you can implement some tax strategies to do so. So one of my favorite things to do is have my clients open up what's called a solo 401k. And it allows them to put away $58K a year, and that money, they get a $58K tax deduction, and that money is invested in the market. So it's like having their own 401k that they create and they control.
Solo 401k. You can take $58,000, put it into that. They trade the money.
Well, you can trade the money.
Invest the money.
Yeah, you can go to a broker and then they'll do it for you. But I love what's called a self-directed solo 401k, which will let you invest in anything. Bitcoin, real estate, you can buy businesses in the self-directed solo 401k. You can be in full control of your money.
Okay, so let's say I do have some crypto, right? You got like Coinbase.
Yep.
The money comes from my business account to buy crypto.
Yep.
I shouldn't take it out, or I should take it out?
You shouldn't take it out because that you put that money in your solo 401k, boom, and then you invest that money in crypto. And
you put the money in the solo 401k, and then you buy the crypto from the solo 401k.
Exactly.
But only $58,000 you could
per year. Per year. But if your wife works in your business and you have her be your admin or your secretary or whatever, now she could put $58K in as well.
Let's say my child works for the solo 401k.
If your child works in the business, they cannot. It's only spouses.
Just spouses.
The spouses.
So that's why people do the polygamy thing.
I don't know if that's the word for it, but
makes sense. You know what I'm saying? We all get a solo 401k.
Everybody good. But but it is power, and it is power in having a business with your spouse, because now every date you go on, if y'all talk about business, now that's a 100% business deductible meal.
You take a screenshot.
Yeah, exactly.
But you know, so I use my card for everything. Why is that not good enough though?
No. The IRS just wants to see the receipt to show. Because here's the thing: if you go to Home Depot and it shows $200, they don't know what you bought.
But if it's a restaurant,
yeah, I mean, touche. I just recommend my clients keep receipts over $100. So, and that's with the QuickBooks. You just
put anything over $100.
Anything over
Why not under $100?
Because they're not, most likely the IRS not checking that expenses that low. They don't have time for that. Right?
Got you.
So anything over 100, snap the receipt, you good.
See, I thought I was just good with just swiping it, because if you see I'm doing it, and I just tell you, okay, this
and receipts are only for audits, only if you get audited. But if you're taking care of business, you won't get audited.
if I'm like paying my taxes and stuff.
Yeah, taking care of business, paying your taxes, writing off what you're supposed to write off. Receipts are only for audits. They're not for filing taxes. They're just in case you get audited. Makes sense.
Okay, but the good news is I don't have to have these sheets of paper.
Yeah,
because I can just take a picture and upload it tomorrow.
Exactly. But again, my biggest point, I just want people to know how powerful it is to be in control of the taxes you pay. Because here's the thing, like we all work so hard for our money.
Yeah.
And to have somebody take 50% of it that's not okay. So the reason I love taxes so much is I'm helping people maintain the life that they work so hard for. Right? So that's why I love teaching it. That's why I love educating entrepreneurs about it, because like, if I can help you keep all the money that you make, you're going to be good. Your kids are going to be good. You can pass the money down. And if I take your highest expense away, like your life is going to be good.
Let me ask you this question. Let's say, for instance, we got deductions or whatever, and I owe $200,000, let's say. I can take that $200,000 and buy a building as an investment property and not have to pay any taxes at all?
So you're saying if you owe $200,000 in taxes, and you, instead of paying your taxes, you bought a building?
Yes.
No, you got to pay that tax. You have to pay that tax because that tax is on money that you owe from the previous year. You have to pay that.
That tax is on money.
So when you file taxes in 2021, it's for the year of 2020. It's the previous year, right?
Yes.
Yeah, so that's why you have to, because that year is closed, you have to pay that money.
No, so that's what I'm saying. So 2020, let's say we're in 2020.
Right now.
And we're going to file 21 taxes. Or let's say 2021. Let's just say person makes $100,000.
Yep. Net income, right?
Net income.
Gotcha.
So they made $400,000, net income $100,000.
Yep.
Right? Before 2021 ends, I take that $100,000 and I buy an investment property. Does that mean that my net income is zero and I don't have to pay any taxes?
No, it doesn't, because you only get to write off the depreciation. But if you went and took that $100,000 and bought a car, you would get to write off that $100,000, because for cars, they did accelerated depreciation. You push all the depreciation for the rest of life into the first year, right?
Oh.
And what you could do, you could prepay your marketing expense for the next year in December 31st. You can prepay all your Facebook ads, all your marketing December 31st, or you can invest in a mentorship, right? All these expenses you can pay before the end of the year, and then it's going to wipe out all your income. And then you don't even have to pay it with your money. You can use a credit card, a loan, or whatever.
So if I do a mastermind, it's $100,000, then that means I didn't make any money.
Exactly.
What else is, what's it called? Accelerated?
Depreciation.
No.
What are you talking about?
Accelerated something, you said.
I said prepaid expenses.
Prepaid. So you said the difference between a house and a car is they push something to the front.
They push the depreciation to the front.
Yes. What else do they push to the front, like cars? Or is that like its own?
The car is its own thing. The car is the only thing that they push depreciation up to the first year. But what was dope, I tell entrepreneurs, is to think about what can you prepay in December? What expense can you prepay in December that's going to make you more money next year?
What if my company, okay, I didn't do the solo 401k, what if my company buys $100,000 in crypto?
That's an investment. It's not, you can't write that off. You can still buy the crypto, but that's not an expense, that's an investment.
What if the building, I'm buying a building to house my office, and it's $100,000. It's a business expense.
Yes, that scenario, if you're buying an office for rent, that $100,000 would be a business expense.
I'm buying it for rent.
You're buying it for your business only.
Yes.
Yes, that's a business expense, and you're also going to get deductions for depreciation in future years.
I'm definitely that client, bro. I'll give you a headache. I'm not gonna lie to you.
No, but
what if?
The point is to get entrepreneurs to ask what if, right? Most people are so scared to even ask what if. They're missing out on hundreds of thousands of dollars that they truly deserve, right? So my goal is to get entrepreneurs to ask the question, what if? What can I write off, right? And we can talk about the book in a second, but like when I made my tax-free living ebook, I put 200 plus deductions in there in alphabetical order. So now when you're at the store, you don't have to ask your question.
You have one on you?
I don't have one on me. It's an ebook. So
it's an ebook.
It's an ebook. Yeah. But
you have it that you can send. Can you send it to me, because I want to look at some stuff right now.
I got you.
So what's it called?
Tax-free living ebook.
tax-free living ebook.
Yep.
And we got like something special for our audience, right?
Yes, we do.
What was the website?
It was socialprooftaxfree.com.
Yes. Hold on, let me double check. So y'all know on the podcast we like to make sure y'all taken care of. So socialprooftaxfree.com. Your ebook, you can get your ebook. They'll get the ebook, right?
Yes, sir.
Okay.
And here's the dope part about it. It has over 200 tax deductions in there. So like when you're asking yourself the question, can I write it off? You just go through the alphabetical order. It has that line item you're looking for. Yeah, I'm going to send it to you right now.
Oh, yeah. Send it to me. I want to look at some stuff.
Got you. So now you don't have to ask the question, can I write off equipment? Can I write off my car? Can I write off a cell phone? Can I write off a computer? You go to that section in the book and then you see computer and then I have a passage on how to write it off.
Mm-hmm. Okay, here we go. Okay, tax-free. Okay. Because this is super important. How much is the book?
It's $197, but I'm getting it to your audience for 70% off. So it's like 40.
Oh, you said 70%?
Yeah, 70%. You got good people, bro. Like
you the man, bro.
All your people are entrepreneurs. Like, you know what I'm saying?
It took me by surprise. I didn't.
Yeah.
All right. So 200 plus tax deductions.
Yeah.
Where's it at? How do I? Oh, accounting expenses, advertising, amortization.
Yeah.
Joe, go look it up, bro. I got time to explain it to you. Okay?
And here's the dope part, right? Because you're about to get to one of my favorite parts. Education is tax deductible. Like we were taught.
Oh, attorney's fees.
Attorney fees.
I actually just
fees.
brought on. Shouts out Kendra Stevens. I just brought her on as an attorney.
Yeah. So all these expenses that we're paying for anyway, yo, like these are tax write-offs that we should be utilizing in our business.
Billboards.
All the advertising.
If you are renting or own a billboard, you can deduct the expense, the whole expense.
Whole expense.
Oh, we're about to go on a whole billboard campaign.
I'm telling you, like, what can you prepay in December that's going to make you more money next year? If I'm you, I'm prepaying all those expenses. Getting that income down to zero.
Yo, so I probably need to start talking to entrepreneurs. So I have like a podcasting. I have a podcasting mentorship, right?
Uh-huh.
So it's $35,000.
Yeah.
If somebody wants to learn how to podcast to build their business, they might as well just give me the $35,000 because they can write off all of that.
Why do you think Neo sent Myron the 55 on December 31st? Think that was an accident?
It was December 31st.
You think that was an accident? That wasn't an accident. That's on purpose.
That's crazy because when we talked about it, it was December 31st.
Yeah. When I watched that episode, I was like, he's smart.
Wow. So y'all need to it's a text, right? You need this. Give me the $35,000, fam. Okay, cars, cell phones, charitable contributions. You or your business can deduct any of the following. Cash contribution. Hold on. So I tithe a lot at my church. But I tithe it from my business account because I tithe off my gross.
Gotcha.
But someone will tell you can't write off the whole thing.
So I can teach you how.
Come on, man.
So the IRS took away the typical charitable contribution. They took it away in the last Tax Cuts and Job Act, whatever. But there's a way for you to finesse it. If you donate to a charity, a church or whatever, and you take a picture with the pastor or whatever and promote your donation amount, that's now a promotional expense for your business and it can bring future business back to you.
I don't know if my pastor's gonna let me do that.
But I'm gonna say so that's a creative way. So when I donate to charities, I get a big check made, I go to the charity, I take a picture with them, and I get to write off that as a promotional expense for my business because I never know who might see that, might come to me and give me more business based off the publicity that I get from that donation.
I gotta ask him.
Ask him. I mean, it's a way.
What if he fixed up a bathroom in there or created this the David Shen's Bible study room and you know what I'm saying?
Yeah,
Could that be a better way of doing it versus the whole tithing portion?
That could be a better way. But the easiest way is just to hey, it's my donation. But your pastor might not want people to know how much.
I gotta ask God how he feels about that.
Wait for him about it. There's limits to everything, right? There's limits to everything.
I'm trying to finesse. You know, so what? Oh, come to the mic. I need you to come to the mic so they can hear that. I don't want God looking at me as a finesser.
What quickly came to my mind was you could sponsor a cheerleading team or one of the Sunday school classes. You could sponsor one of those and then you could take a picture with.
The people? Is that what
Yeah,
that work?
people in the class.
That's really good, actually. It's all about being creative, you know?
We'll pray about it. Okay, so what is the normal way? I mean, because you can still write off some percent.
Yeah, but it has to be, you have to donate over $24,000 for it to count, because you're going to itemize your taxes instead of, it needs to be over $24,000.
So say it's over $24,000.
Then you can write it off. Then you're good. Then you don't have to do any of this. But some people don't tithe or give away that money.
So if a charitable contribution is over $24,000, you can write off all of it.
Yeah, it's part of your itemized deduction on your tax return.
Are you sure?
Cash contributions, yeah. It might be 50%. I got to double check. But I know cash contributions, it might be 50%. I need to double check that.
Okay.
But
Isn't it subject to
Mike, I need you on the mic. So this helps everybody. So I need you on the mic. Go ahead.
it might have a limit. It might have a limit on based on your AGI, but that's why I love writing it off in the business, because it has
AGI is what?
Adjusted gross income.
Okay.
So they might cap it off on after you make a certain amount of money, right? But that's why I personally love writing it off in my business, because there's no caps, there's no percentage threshold. It's just a 100% tax deduction.
If it was personal.
If it was personal?
No, let's say I write a check from my business to my church.
Right.
That doesn't have anything to do with the AGI?
If you write it off in personal, it will have to do with your AGI. But if you write it off of your business as promotional, you can't donate to...
it has to be framed as promotion.
Exactly. There's no charitable deduction for business. There's no such thing. Yeah, unfortunately. So you got to be creative ways to write it off.
I don't know if I want to be...
Yeah, I mean, again, ask God. Ask God. Ask God.
I want to be a finesser. You know what I mean?
Yeah, for sure.
Oh, you did this to get it written off. I see what you did, son.
Yeah, for sure.
Okay,
for sure.
I got an idea for you, produced by Pat. So, what you could do, since you hoop, you do a church league, and use that investment.
Yeah, but it's all, see the way, anytime you start out with, okay, I got an idea for you.
Yeah.
Anyway, all right, I get it. Thank you so much, man. Okay, I see clothing used exclusively for work. Okay. This is my brand.
Yeah.
Clubs, membership fees and dues for clubs.
Yeah.
So 100% of the membership fees.
Yeah, so I'm a member at Soho House, so I get to write off, that stuff. If you're a member of a club,
Mastermind.
Masterminds. That's more education, but same thing.
Commuting, conversation, computers, conferences. So conferences.
Yeah. And that's the thing. So let me just go on that side right quick. We were taught to go to college, spend $100,000 in debt, and we can't write it off at all. All we can write off is some tuition, interest on our tuition. Right. But you mean to tell me I can go to a Tony Robbins event, go learn from a billionaire who's actually doing it, and I can write off the whole thing in my business?
That's it.
Right? So now conferences, courses, education, these are all tax deductible expenses that you're now getting a write-off to educate yourself. It's huge.
Got it. So anybody need some write-offs? I got an event coming up this week. Content Creation Bootcamp. It's like a couple dollars. You might want to sign up. It's a write-off.
For sure,
you know what I mean?
for sure.
All right, so credit cards. Making purchases for your business on a credit card is 100% deductible?
Yeah. And
if you are a sole proprietor or a single member LLC, you can deduct purchases made on your personal credit card. Note, you cannot include personal charges. Partnerships, LLCs, corporations, S Corps should have a debit and credit cards in the business name to maximize the deduction. Explain that to me.
So business credit cards, if you use your business credit card, you can write off whatever you purchase on it, but you also can write off the interest that if you were to get charged.
If you get charged, okay.
So, if you go carry any interest, at least let it be tax deductible interest.
Right,
I'd rather you not have any interest, but...
Right, for sure. If you have a business credit card, you need to be buying business stuff anyway.
Exactly.
I got you.
Exactly.
This is a dope list. Depreciation, delivery charges and shipping, design costs.
200 plus in there. It's my goal was to make, when an entrepreneur get this book, they don't have to ask a question anymore.
Yeah.
They get to go through the list and see could they write it off. And this book alone will save them $20K in taxes easily.
That's a fact. Education expenses, electricity, employees, fixed assets, fixtures, fringe benefits. What's that?
That's benefits that you give your employees. Okay.
I don't know why I don't know where my mind was.
It sounded sexy or something?
Yeah, I was having to give my wife fringe benefits all the time, right?
Yeah, for sure.
Okay, flowers, Then yes, flowers are deductible for your office, the store secretary.
It's got to be a monetary limit on that, right?
Client. I mean, I don't see a monetary limit. It just says flowers.
Oh, but it's for the office, though.
Oh, for your office. Yeah.
Office.
Graphic design, grooming. Personal grooming expenses are not deductible, except when you're traveling away from home overnight on business.
Exactly. So if you have an extensive stay somewhere, you can deduct your haircuts in certain situations. There has to be an extensive stay.
Intellectual property?
Yeah.
Okay. Intangibles, also called intellectual property, are business assets you cannot see, such as copyrights, trademarks, patents, and goodwill. Most intangibles are amortized
over 15 years, right?
Over a period of years.
Yeah.
Also, if you pay for your copyright, trademark,
exactly.
Okay, gotcha. This is good, man.
Yeah, I mean,
some mad stuff on here. So it's 200 things on here.
200%.
Losses. Okay, good. Casualty and theft losses are deductible with some limitations. Business losses, which is shown as a loss on your tax return, can be used to offset other income.
Let's talk about that. I think it's important for entrepreneurs to know. So, guys, if you have a business and let's say your business in the first year, it loses $10,000, right? You can use that $10,000 loss in future years. Let's say the next year you made $100,000, you can use that $10,000 loss in the future year to bring it down to $90,000. Because there's no point of you having a negative $10,000. So you can carry forward your losses in your business. That's very important that entrepreneurs need to know.
This is so good, man. Mileage, there's a lot in there. Motorcycles?
If it's for your business, I mean.
The motorcycle, the cost of a motorcycle used for business can be deducted the year of purchase or depreciated
just like a
over
car.
5 years. Oh.
Yeah.
I might need a motorcycle.
Yeah, a quick hack for anybody who doesn't even have a business and want to write out their car. If you list it on Turo, your car is now a business. So now you can make money from your car and then write off all your car expenses and you have your car pay your car note for you and you get the tax deduction of having a car. So you even have to have a business. You could just turn your car into a business.
Hold on. Scholarships. Scholarship given to members of the community as a gesture of goodwill may be deductible as a promotional expense.
Same thing, the same play I gave you for the charity.
Okay. So we saw, I'm not taking nothing away from it. But the guy, remember the guy, I think he went to Morehouse and paid everybody's.
Oh, yeah.
Was that a play? Did he run the play?
If he had good accounting, that's the play. You know how much money that was? I forgot the number, but
I'm thinking you doing that and y'all just gonna take care of my people.
Well, yeah, first of all, just because it's a tax deduction doesn't mean it's a bad thing. He probably had good intentions, but why not write it off at the same time? Why not write it off at the same time, man? So again, we're doing all of these things anyway. Why not make it a tax deductible expense?
That is lit.
That's why
I'm about to start doing some charitable stuff. I do charitable stuff all the time. Not all the time.
Now, see, that's different.
I don't do it all the time, but
right.
This is so good. This ebook is dope.
Thank you. I put a lot of time and effort in that thing.
Yeah, and it's more than the 200. Here's a bonus office trusting us.
Yeah, I snuck some videos in there and stuff to help people out.
This is good. And they can get, okay. After they get the, okay. All right.
We'll have the ebook link in there.
Okay.
We'll have it.
This is good, man. And you're doing a good thing.
I love it.
Is Neil here? Oh, anytime I see you, Neil's not too far behind. Okay, cool. Okay. This is good. Anybody got any questions? Anybody got any questions for... I bet y'all do. So do y'all need to write it off? We got tickets available still. You know what I mean? Okay, go ahead. Somebody to the microphone. This is so awesome, man.
What's the site again? Where the ebook is?
This could be socialprooftaxfree.com, right?
Social proof?
No.
It's not right now.
It's not up yet, yeah.
Yes, it is. I bought it. Thanks, Joe.
Bro, all this is scrap.
So socialprooftaxfree.com is not up right now, but y'all here, so after this, we got you. Okay? All right.
Tax-free.
Well, hold on.
Okay.
It's after the recording. But we're still recording.
Okay.
Come on, we're going to play.
That's fair.
Okay. I'm really trying to make more money so that I can do more charitable content. It's for the community. But I knew Neil was here. I knew it. Anytime. Go ahead.
Okay, so hopefully this will help you make more money. I don't know. But it just made me think about when you guys were talking about scholarships, how you gave some scholarships away for those who did the podcast mastermind. Does that qualify as a write-off?
So, yeah, okay. I see what you're doing.
The fingers for me. It's the fingers.
Maybe suggested it at a selfish intent, but I see what you're doing. Okay. So I have a mastermind. It's $35,000.
And you gave some scholarships away.
Let's say I didn't, but let's say I'm going to give away a scholarship. Can I write off the $35,000 that I gave away?
No.
Oh.
You have to actually spend that money. You can't just say I'm waiving the fee and that's a write-off. You have to actually spend. If you were to take $35,000 and then deposit it somewhere for her as a scholarship, yeah, but you can't just. That means I can say I'm charging you $100,000 and be like, no, I got you for free, and then get a $100,000 write-off. Like I can't do that.
That was a good suggestion.
But I try. I mean, I'm just not trying to. I don't want to lie on here. So
that's good. Yes, ma'am.
Okay, so bringing it back to the Roth IRAs, can't you backdoor money into it so you can surpass that $6,000 amount? Or how does that work?
Yeah, you're right in front of the camera, Neil. There's a camera here, bro. Sit down. Go that way. You're still in the camera. I appreciate you, Neil. Thank you. We're running a professional organization here. We're just walking around, hanging out. Okay. Yeah. Oh, and I got a question too. So, okay, go ahead. You stay right there because I got a question for our situation. Go for it. I'm sorry. You said something.
So I got you. So for the Roth IRA, if you make over $130,000 and you're single, you can't contribute to it because you make too much money. But you can backdoor into a Roth IRA by opening up a traditional IRA first. Then the next day you call them and say, I want to convert it to a Roth. There's no income limits on Roth conversions. There's only income limits on Roth contributions.
Gotcha.
Makes sense?
Good. So
great question. That's a very smart question.
Yeah. So I don't know if this will be an investment or a business expense. So me and Neo, we about to invest in this company's business. It's an investment. Never mind.
Yeah. You have to look at it. Is it an expense or is it an investment? If it's an expense, yeah.
What if we don't make our money back?
You have the opportunity to make your money back. You know what I'm saying? Okay. I'm sorry. I didn't make the rules, brother.
No, that's good. That's good.
I just follow.
Okay, so this is really, really important because we really... you got a question?
Yeah.
All right, go for it.
Yeah, so my question is, I actually had an investment property I had sold earlier this year, and I actually took a loss on it. So in regards to, I know you mentioned something about losses within the business per se. What would, I guess the question is, from a tax perspective, how should I approach that? Or is there any benefits from actually taking the loss from that particular?
So you can write off a portion of that loss against your ordinary income that you make from your job or your business, right? So it's a calculation to it, but like if you took a $10,000 loss, you could potentially take that $10,000 loss against $100,000 work income or business income. So it's going to drop your net income down. So you want to report that loss on your taxes because it's going to lower your income, which lowers your taxes.
So it is under an LLC. So this
exactly. Then it's a business, exactly. So that loss will lower your income elsewhere.
Okay.
Which is dope.
Okay, cool.
Yeah. Very lit. Very lit. Yes.
So I can't help it because I'm a CPA also and I'm an accountant. So a lot of these things that are coming up just brings up a really important point, and that is to optimize on all the strategies that he's talking about really means that you have to have really good books and records, right? You really need to invest in your accounting of your, because an accounting reflects every single transaction that you do. Whatever you buy, whatever you sell, you buy a building, you sold the building, you took a loss on the building. So now, your tax strategist and guys like him can look at all of your transactions and tell you what you can do to optimize. So don't think like you got to remember everything in your head. You really need to invest in bookkeeping. Really sound accounting of every single transaction. And as he talks about, then you get smarter in terms of what is a business transaction. My cell phone bill is a business transaction. Certain clothes might be a business transaction. I bought this car, it's a business transaction. And you begin to think like what actually goes into your business, but you really need solid accounting, right? And I just wanted to say that.
That's a fact.
For sure.
That's
huge.
Yeah, we went through that. Yo, his bookkeeper is $700. And he says it's a really good bookkeeper.
I know her though. I've known her for a while.
And he's a CFO. He's a CPA also. So.
Yeah.
I'm extremely organized. I don't give her a hard time. You might.
So I bet you get a lot of people that's just.
I've seen a lot. I've seen a lot. Like, if that's personal, that was that one time, and that no. If you have everything coming out of one account, it just makes everybody's life easier. Again, then you can look at your numbers and make a decision. But like, you better run the play of prepaying those expenses before December 31st.
You know, I was wondering why Neil kept buying all these cars, and I realized it's a play. It's a play. Right? You gotta write it off.
Exactly.
Right?
Exactly.
Yo, Carter, this was dope, man.
It was fun.
This was absolutely dope. Is there anything we didn't cover yet? I feel like we covered a lot.
Yeah,
there's a lot that we
told you how
didn't
to
cover.
get the IRS to pay for your vacations, your cars, your house, your kids. I gave away a lot.
Yeah. Social proof tax free. Get the book.
Yes, sir.
I'm definitely. You just sent it to me.
Yeah.
And I'm about to go over it because and you know, kind of discuss it with my CFO squad.
Yeah.
You know what I mean?
And just let them know, like, hey, this is some things I'm thinking about doing. They go like, run the play.
Yeah, that's good. And not that it's almost like everybody can't think of everything.
Exactly. It's irresponsible to like depend on one person.
And you have the whole list. And I'm sure if somebody's like, yo, but in your book, can we do this? You might be like, oh yeah, we can.
Exactly. I don't. It's 300 things in there. There's no way I can remember. Some of the stuff you said, I'm like, oh, okay, I forgot about that.
No doubt. So yes, this is good, man. I gotta pay some bills. I got a quick commercial, and then I'm gonna have you close this out with something strong, man.
Okay.
All right. So this episode is sponsored by The Morning Meetup, the only organization that gathers every single day. Let me tell you about The Morning Meetup. I'm gonna have you.
How come? George said it was dope.
On The Morning Meetup. Yeah. It's like 500 people in there every morning.
I was like, that's insanity. But
every day, Monday through Friday. So, yeah, man, we teach entrepreneurship, and we have a theme for the month, and every call throughout the week supports the theme of the month. So these last couple months, we're going over straight money. We're talking about money. Like, how do you really set yourself up for wealth? And we have to have you there.
For sure.
So, and it's only $1. It's $79 a month, but they can try it out for $1 because here's my bet. If someone experiences what we do for $1,
it's
not going anywhere.
It's a no-brainer.
It's a no-brainer.
Yeah.
So
I'm gonna hack your funnel later.
Okay. Okay. Go to themorningmeetup.com and check it out, man. So I got a question for you as we wrap up. I like to make predictions on the podcast. And I like to know where you see yourself in the next 5 years, 5 years from now, so that I can watch this 5 years from today and say, yo, Carter said he was going to do that. And look, he did it.
Ooh, that's a good question. Man, over the next 5 years, I want to help over 100,000 entrepreneurs live tax-free. I'm coming up with a mastermind program.
When you say tax-free,
so if I can get your net income down to zero, you're not paying taxes.
Is that your goal?
My goal is to help you keep the money that you earn.
But here's the thing: shouldn't you pay taxes though?
I love this question. So if I pay taxes, right? Let's say I pay taxes. The government's going to use my money, let's say, to fund unemployment. They're going to pay somebody that's unemployed to stay at home. That person has no motivation to do anything. Instead, why don't I keep that money, create another job, give that person the job, give them purpose, right? Give them something to live for. So all they're doing is put money into the government. If I do it myself, I can give that person purpose, I can control it, and give somebody something to work for.
I actually I never heard that response to the question. Because there are some people that say you shouldn't live tax-free. You should. But I guess if I'm doing the money and I'm doing these charitable contributions and I'm
scholarships, I want to control the foundations I help. I want to control the people I hire. Right? I don't want to leave it up to somebody else. So for me, I'm going to use a lot of that money for good.
Can I pay my own nonprofit for stuff?
You can fund your nonprofit.
Not pay, fund.
Yeah, you can fund your nonprofit. And then that non-for-profits get a lot of tax breaks, which I don't think we have time to dive into.
So I can put money from my business into my nonprofit.
Absolutely.
Write it off as long as I'm doing something with this nonprofit money.
It's a little bit more complicated than that.
Feels illegal, yeah.
Yeah, it's a little bit more complicated than that, but there are tax breaks you get for having a nonprofit, though.
Okay. I do have a nonprofit. I didn't do anything with it yet, necessarily.
Okay. But yeah, I mean, that's the point. So don't think of not paying taxes as something bad if you're using the money for good. Again, I'm not saying don't pay taxes. I'm saying pay what you legally owe. Let's not leave a tip.
But your objective is to help entrepreneurs live tax-free.
Exactly. Because they can use that money to fund things they want to fund. Like, I'm from the south side of Chicago. I want to put money back in that community. I can't trust the government to do that because they haven't done it yet.
That's a good point.
Yeah.
That's a good point. Okay. All right. Well, can we clap that up? That was a good answer. That was a good answer. So, man, thank you so much for coming, man. Make sure you go to socialprooftaxfree.com and get the book. It's got some specials in there. 70% off?
70% off.
70% off.
Because you got good people.
We got good people. And they're entrepreneurs. And this is like the most needed conversation ever.
For sure.
So go to socialprooftaxfree.com. Please, man, let everybody, I want to say thank you.
No, thank you for having me.
Our community. This is like, this is we always talk about making money, but we don't really talk about how to stay out of jail.
I say, I want you to know, making the bag is important, but keeping the bag is equally important,
100%.
right? Like you worked hard, keep it. Pass it to your kids. Like wealthy people aren't paying, like Jeff Bezos, like they're not doing that. They're not paying taxes. They putting that money back to their family.
In their community.
In their community.
Kind of.
And yeah.
You never know.
Never know.
But we'll put, I want to put more money into my community. So,
right.
All right. So please, again, thank you, man. Please let everybody know where to follow you and close us out with a word of wisdom.
Okay. You can find me on Instagram at Cofield_advisor. Same name on Twitter and everything like that. My word of wisdom is that you don't have to be great to get started, but you have to get started to be great. So whatever you want to do, start today. Don't wait.
Can't close it out no better than that. Listen, y'all, do yourself a favor. Go follow this brother right here. He's just a brilliant, brilliant individual, okay? Buy some merch because by the time you see this, I'll probably own a percentage of the company.
Can I drop the merch link right here?
Yeah, of course.
Taxfreemerch.com. Taxfreemerch.com. You can get the shirts and it also will take you to the Melanin Money store. We can get other stuff.
Tax-free merch. Absolutely. Yeah, go support it because y'all probably see this. I probably invested in it.
Probably. Hey, on your episode, he was trying to take it.
What? You didn't say that. You already got a company. Leave my companies alone, man. Do yourself a favor, man. Go follow my brother. Go get you some merch and get you some social proof, man. Go build something. Spend all your time, energy, and money building something, but I need you to go back to your community. What if I told you for $1, I will introduce you to hundreds of entrepreneurs every single morning this week? From all across the country, you'll be able to talk to hundreds of entrepreneurs and I'll coach you. I'll coach you for $1 this whole week. And I'll introduce you to some of my successful friends for $1 this week. Would you take part in that? Well, go to themorningmeetup.com because that's exactly what we're doing here, okay? The only organization that gathers entrepreneurs every single day for the betterment of entrepreneurship, okay? Every single day, Monday through Friday, we gather, we're growing, we're learning. We got a book club. Have you ever seen hundreds of entrepreneurs reading the same book? Every single chapter, every single day, we're growing together, okay? You need the environment to grow in. Themorningmeetup.com, $1. I'm gonna give you all of this for $1. If you wanna stay, great. It's $79 a month after that. If not, no obligation. You can leave whenever you want. All right? Themorningmeetup.com. I'll see you in the morning.